Good morning, dear student. I am Kunal Kiran from the Millennium School, Lucknow. Children, we have been learning accounting treatment at the time of retirement of a partner. We have been already discussed about the adjustments related to goodwill, related to reserves and surplus, related to specific reserves, and related to revaluation of assets and liabilities. So quickly I recap. For the goodwill treatment, the journal entry is continuing partners' capital account in their gaining ratio to retiring partners' capital account. For reserves and surpluses should be written off among all the partners in their old ratio. For revaluation of assets and liabilities, we will do the same, all the increase in assets, decrease in liability and unrecorded asset account debited to revaluation account. If there is a decrease in asset, increase in liability and unrecorded liability, then revaluation account debited to decrease in asset, increase in liability and unrecorded liability. If there is a profit on revaluation, that should be shared by all the partners, and the journal entry will be revaluation account debited to all the partners in their old ratio. The same way, if there is a loss on revaluation, that will be shared by all the partners in their old ratio, and the journal entry will be all partners capital account debited to revaluation account in their old ratio. So with this conceptual clarity, I would like to explain you one more illustration. This is very comprehensive an illustration. It covers all the concepts we have discussed yet. So the question says X, Y and Z were partners in a firm with profit sharing ratio of 1/2, 1/3 and 1/6 respectively. The balance sheet of the firm as at 31st March 2020 was as follows. Liabilities are given and assets are given. And apart from this information, they are sharing Z retired on 1st April 2020 on the following terms. First, goodwill of the firm is valued at 3 lakh. Value of the patent is to be reduced by 20%, that of the machinery to 90%. Provision for doubtful debt is to be raised to 6%. Liability for workmen compensation to the extent of 60,000 to be created. Z took the investment at market value. Amount due to Z is to be settled on the following basis: 50% on retirement, 50% of the balance within 1 year, and the balance by bill of exchange without interest of 3 months. You are required to show entries for the treatment of goodwill, revaluation account, partners capital account and balance sheet of X and Y after Z's retirement. Okay, so children, we are going to solve this question comprehensively. We will prepare all the ledgers, that is revaluation account and partners capital account, and as well as we are also going to prepare balance sheet. Apart from this, I'm also sharing all the journal entries required at this situation of retirement. So because in CBSE both the ways question can be raised. They can ask you for passing a journal entries and preparing a balance sheet. They can ask you to prepare necessary ledger with balance sheet. So we will take it comprehensively here. So first of all, the method is, first of all, you make a 3 formats: evaluation account format, partners capital account format, and balance sheet. And we will enter it simultaneously wherever required. Now, first on the liability side, first item is given as trade creditors 2,10,000. There is no adjustment related to trade creditors, so it will be shown in the balance sheet as it is. So this is trade creditor 2,10,000 they have written, right? Now next item in the balance sheet is workmen compensation reserve. and the amount of workman compensation reserve is 1,20,000. So workman compensation reserve has been given 1,20,000. Apart from this, information says liability for workman compensation to the extent of 60,000 is to be created. So actual liability we are expecting 60,000 and the amount of reserve is 1,20,000 here. So the concept says for the specific reserve, if there is actual liability, then we will use first this reserve to meeting out the actual liability, and rest of amount will be written off among the all the partners in their old ratio. So the journal entry for this, for workmen compensation reserve, workmen compensation reserve account debited with 1,20,000. We will transfer 60,000 to the actual liability, that is to claim for workmen compensation account, and rest of amount 60,000 will be shared by all the partners including the retiring partner, that is Z, to X capital, to Y's capital, to Z's capital, 30,000, 20,000 and 10,000, because their profit sharing ratio is 3:2:1, and it will be shown in the balance sheet. Workmen compensation claim will be shown here as 60,000, and in the partners capital account you will show the workmen compensation reserve 30,000, 20,000 and 10,000. Right, nothing will be shown as a workmen compensation fund in the balance sheet because it is already written off. Next item given in the question on the liability side is employees provident fund. So there is no adjustment related to employees provident fund, and it is not a reserve, it's a liability, normal liability. So there is no change, so it will be shown in the balance sheet as it is employees provident fund 60,000. Right, now next is investment fluctuation fund. This is also a specific reserve. The concept says if there is any decrease in value market price of the investment, so the loss due to decrease in market price of the investment should be met out by this reserve, and rest of amount will be shared by all the partners in their old ratio. In this question they have said Z took over the investment at market price, and the market price given in the question is 1,76,000. Book value is 1,50,000 and market price is 1,76,000. So there is no decrease in value market price of the investment. In fact, it is increased by 26,000, which is a gain for the business. So for that gain, and so this whole 60,000 IFF, investment fluctuation reserve, will be written off among all the partners in their old ratio, and this investment we have been taken by Z in its market price, that is 1,76,000. So the journal entry for all this, first investment is increased by 26,000, so this increase in asset should be debited, and this is gain for the business, so revaluation account credited. And the same time Z has taken this investment at its market price, so now the value of investment at 1,76,000. Z's capital account debited because he is the receiver, or you can say he has taken investment, so his capital will be decreased by this amount 1,76,000, and investment is decreased by 1,76,000, or it is going out from the business, that's why it is credited. So investment fluctuation fund will be written off among all the partners in their old ratio. Investment fluctuation reserve account debited with 60,000 to X capital, to Y capital, to Z capital, 30,000, 20,000 and 10,000, and it will be shown in the ledger. So first of all, revaluation account will be credited with 26,000. IFF has been distributed. This have been shown here, 30,000, 20,000 and 10,000, right? and investment will not shown be in the balance sheet because it is taken over by the Z, and Z has taken, so Z account will be debited. So this is investment is written here to investment, and Z account has been debited with 1,76,000. This is all treatment about the adjustment given. Now next is partners capital account balances. They should be brought down in their capital by balance BD, right? Now next is cash is given 57,500, and we will take it at the end because payment 50% payment has been made to the Z. So what is that amount, we will get to know at the end. So I'm leaving cash balance. Now debtor are given 4,40,000. 4 lakh debtors are given 4 lakh, and provision are given 20,000. There is an adjustment. Provision for doubtful debt is to be raised to 6%. So first of all we will calculate 6% of the debtor. I have shown this. 6% of the debtor is 24,000 and existing provision is 20,000, so we have to raise provision by 4,000. So increase in provision is a liability. Provision is a liability. Provision is a liability and it is a loss for the business. So revaluation account debited to provision for doubtful debt 4,000. So in the revaluation account debit side we will put to provision for doubtful debt 4,000, and in the balance sheet we will write debtor 4 lakh less provision for doubtful debt. It is increased by 4,000, that is 24,000, and the balance amount, that is 3,76,000, will be shown in the main column. Now next is stock. There is no adjustment related to stock, so it will be shown as it is 3,76,000, right? Now next is investment. We have already done. Patent, there is a adjustment related to patent here. Value of patent is to be reduced by 20% and machinery to 90%. Means patent is reduced by 20% and machinery is reduced to 90%, means there is a decrease of 10% in the machinery. So 10% of the machinery is 50,000 and 20% of the patent is 20,000. So decrease in value is a loss. So revaluation account will be debited with 50 plus 20, that is 70,000, to machinery, to patents. Now in the revaluation account debit side you will write 2 patent, 2 machinery, 20,000 and 50,000. In balance sheet you will reduce it. It was 1 lakh, now it is reduced by 20,000, it become 80,000, and machinery is become 4,50,000 after reduction of 50,000. Now another thing is given in the balance sheet, advertisement expenditure. This is deferred revenue expenditure, or you can say accumulated losses. The accounting treatment for this is they should be written off among all the partners in their old ratio, and the journal entry will be, because it is having a debit balance, so while you are writing off, it should be credited, and all partners capital account will be debited in their old ratio. It was 36,000, 3:2:1, that is 18,000, 12,000 and 6,000. So in the partners capital account on the debit side you will write advertisement to advertisement expenditure 18,000, 12,000 and 6,000. It will not be shown in the balance sheet because it is no more, it is already written off. Now goodwill, this is existing goodwill of 60,000. The accounting treatment for existing goodwill is at the time of retirement, it should be written off among all the partners, and the journal entry will be all the partners capital account debited in their old ratio to goodwill. So this is given X capital, Y capital, Z capital to goodwill, right? So partners capital account will be debited to goodwill 30,000, 20,000 and 10,000. And goodwill will not shown in the balance sheet. Now everything is over. We just calculate the revaluation profit or loss. There is a loss. Debit side total is 74,000. Credit side total is only 26,000. So there is a difference of 48,000. This is a loss on revaluation. For loss on revaluation, the journal entry will be all partners capital account debited in their old ratio to revaluation account. and it will be debited to partners capital account to revaluation 24,000, 16,000, and 8,000, right? So now we will calculate the balance. So first of all, we will calculate the balance of Z's capital. Z's credit side total is 2,80,000 and debit side total is, this is 10,000 plus 8,000, 18,000 plus 6,000, 24,000. So 2,80,000 minus, uh, apart from this, 1,76,000 also there. So his balance, his amount, total amount due is here. It is, they have shown calculations. 2,80,000 minus 10,000 minus 8,000 minus 6,000 minus 1,76,000. The amount due is 80,000. Out of this 80,000, 50% paid means 40,000 they have paid. Rest of 50% means out of 40,000, 20,000 they have agreed to pay after 1 year, within 1 year, and rest of 50% balance, that is 20,000, they have accepted a bill, that is bills payable. So I have shown this here, total 80,000. So Z's capital account debited, it is now, we are making payment. So Z is the receiver, or you can say there is a decrease in capital should be debited. So Z's capital account debited with 80,000 to bank 40,000 which we have paid, two bills payable for the bill we have, firm has accepted, and rest of amount, that is 20,000, will be transferred to Z's loan account which will be paid within a year, and it will be shown like this: to bank 40,000, to Z's loan account 20,000, to bills payable 20,000. In the balance sheet you will show the Z's loan account 20,000, bills payable 20,000, right? After that you make a balance of X and Z, and the balance of X and Z is 6,38,000 for X and 2,92,000 for Y. That will be shown in the balance sheet and you will make a total. So that's all for the day. I have given one question, same type of question, and you will solve it. You will solve it, and it's a comprehensive question. Note down in your class notes. Very good question for a revision purpose also.